The average savings account interest rate is just over 0.5% according to Bankrate. That jumps to 4.5% for high yield accounts, but after the latest Fed rate cut, even that could decline. So if you're unsure about how much cash to have on hand, Andrew Kajetsky, Vanguard head of brokerage and investments, is here to help. So Andrew, let's start with that rate decision from the Fed earlier this week. Another 25 basis point cut, but less easing expected next year. So how is all of that going to impact cash?
Yeah, thanks for having me, Alexandra. Whenever there's a change in the Fed rate cut, like occurred earlier this week, we always encourage investors to take a step back, look at where they are holding their cash savings. Is it in an account that really meets their needs, particularly to help them reach their savings goals? There are far too many Americans these days that are not getting the returns that they deserve on their hard-earned savings. This is because a lot of that money is sitting in those lower yielding, traditional bank savings accounts that you just talked about. That average savings rate is just 45 basis points. But the good news that is out there, that there are higher yielding offers out there. For example, Vanguard. We've been offering, industry leading money market funds for decades, but we also recently entered the savings arena. We just launched the Vanguard Cash Plus account. It's currently yielding 3.9%. That's 8 times that national average that you quoted.
Mm-hmm. And we seem to have a pretty jittery market right now after that sell-off earlier this week. How does that feed into the calculus of how much cash to hold versus how much cash to invest in stocks?
Yeah, this is a common question that we get from investors, and it's all about finding the right balance, because you certainly need to make sure that you have enough cash on hand, right? If you don't have enough cash on hand, you risk having to dip into your longer term investments like your retirement funds, which can be very detrimental to your financial health. At the same time too, you want to make sure you're not holding too much cash, right? The more cash that you hold, the less diversified your overall portfolio is, which is going to make it harder for you to achieve your long-term outcomes. So again, it's all about finding that right balance. And you want to put cash towards your shorter term savings goals, and make sure you're putting your money to work in your longer term investment goals, like saving for retirement.
And when you talk about that balance, is there a certain percentage of your income that you should reserve for just cash holdings? And if so, how do you appropriately determine that amount?
Yeah, so what Vanguard would recommend, this is all about building first an emergency savings fund, right? Vanguard would recommend that first start off saving at least $2,000, right? Or about half a month's worth of your income. This can build up a nice reserve just in case there is some short-term spending or cash needs that you have. From there, you can start building up a more proper contingency reserve, somewhere in between 3 to 6 months worth of living expenses. And again, beyond that, you want to be really thoughtful of what is your goal? What are you saving for, so that you can start putting that money to work either in a short-term savings account or into a longer-term investment account.
And looking ahead, there are a lot of uncertainties between what the Fed ultimately decides to do with interest rates, the incoming Trump administration. Are you hearing concerns from clients to hold on to more cash until we have a better idea of the future?
What we always stress is to make sure that you control what you focus what you can control on. And what we do is you say start with what is your goal, and then build a plan around that. When you have a goal and a strong plan around that, it's easier to stay the course and filter out the noise that's coming from volatile markets or uncertainty in DC.
And Andrew, some great advice, especially heading into the holidays. Thank you so much. Appreciate your time.